Hello nieces, hello nephews, it's your Uncle Charles here, and it is a Saturday. Now, what are we going to do today? Of course, we're always going to talk about technical analysis of the S&P 500 and other indices. So that sound good to you, definitely hit the subscribe button. And if you want to support the channel, definitely hit the like button. Alright, so the S&P 500, overall, this past week was a pretty choppy week. You know, just playing ping pong within a few ranges that we was looking at. And a range that we was looking at with a few levels within that range. So it's pretty much around the 416 level, around there, 416.5-ish. All the way down to 409.5-ish. Okay, there were cases where we had some false breakdowns of that level, dropped down to 47, I think twice this week, but ultimately had recaptured those levels and just continued chopping. All right, so definitely a choppy week, and that happens because the market, you know, is either gonna do one of two things. It's either gonna trend, it's gonna pick a direction and trend, or it's gonna pick a range of support and resistance levels and chop between those levels. Basing is what I like to call it, building a base for the next leg up or possibly the next leg down. So this week is one of those weeks where it was overall just chopping. Didn't pick one direction. It went up, it went down, it faked out bulls, it faked out bears. Okay, so very important that we understand where the support and resistance levels are and react to them in real time as best we can, because the market can do anything no matter what our forecast is or our predictions. The market has been known to destroy a lot of people's predictions. All right, so I don't try to predict them here. I just try to look for the levels and react to them in real time as best I can. So we'll talk more about that, but first here's the flow sentiment. It's overall bearish, 500k premiums or above, and expiration date within 1 month. That's what it's filtered for, and 67% in the puts, 33% in the calls heading into next week. So big money still overall bearish. Okay, so we're gonna go to the SPY. We're gonna look at, this is a weekly chart. We're gonna look at a weekly chart. All right, not seeing many levels today, but we're gonna go through them and add them together. But right now, I just want you guys to see my multi-year trend line, which is this orange line here that you can see had plenty of touches. All right, definitely was able to use it as good reference this past couple weeks. All right, on when to be bullish or when to be bearish. All right, and of course there is the bull flag. All right, still working its way to get filled and possibly get that third touch. Okay, third weekly touch. All right, so here we're gonna zoom in a little bit more and we're gonna look at some critical levels together. All right, because the way I trade, I identify the resistance level and the support level, and I'll look for calls or go long when a resistance level is cleared, and I'll look to play it to the next level to level. So if I buy a call when a resistance is cleared, I'll look to take profit on the next level above that and leave a runner. Same with looking with puts. When a support level fails, I'll look for puts, play it down to the next level, then leave a small runner in case the market want to bless me with the home run. Okay, so here is where the week ended. Now the level that I want to watch, I'm going to use my rectangle thing here, right? So we can see that around this zone, the 416 to 415 zone, definitely been a level of interest, a zone of interest for us. Okay, you know what? I'm just gonna make it go bigger a little bit. Okay. All right, so here it is. Around that 415 to 416 zone. All right, we have plenty of touches in the past, especially around June of last year, where it bounced and gave us this nice upside move. All right, it's also the lows for a couple weeks back in early March 7th week low, March 14th low. All right, this 415 to 416 zone. This week is no coincidence where we struggled to clear. All right, last week's high was around 415.38 and we closed around that 415 level, but we couldn't hold it this week. Instead, we got a nice rejection of it. All right, that candle right there, it's a pretty choppy candle. All right, but definitely watching that zone 415 to 416. Okay. And I think that if we can clear that level, we can trigger more upside. Now, first, let me go back here. This is my fib level from the March 2020 low to the January 2022 high, around there, okay? Yeah, let me get it right. Okay, we're gonna do this together today. All right, yeah. So the high of this candle is around 479.98. I'm a few cents off. Okay, so that's close enough. Okay. Okay. Got that. Now, what other levels am I watching? So obviously we've been on a downtrend since January of this year, and so far the lows around May of this year. So I want to add a fib levels around there as well, from the January 2022 high to the May 2022 low, and I'll change that color to white. All right. Now notice we have an area of confluence based on the fib levels that I just put in from the January high to the May low. 418.5-ish is the 38.2 retracement level. Now from the March 2020 low to the January 2022 high, 23.6 retracement level is around the 418.5-ish, 0.6-ish levels. Okay, so that level, if we can clear 416, 415 zone, that's definitely a level that I'll be watching as an area of confluence. All right, very powerful level there. And if we can clear that, we can possibly get more upside. But how much higher can we go? So I'm looking at this white trend line. I'll change it to pink. It starts from the March 28 high, connects to the April 4th high, connects to the April 18th high. That's 3 touches. Can we get that 4th touch? All right, and that level for next week would be around, let me see, the candle will be there, so around 423.8-ish, 424. All right, so we'll round it up to 424. All right, so 418.5-ish, and above that is possibly 424. If we can clear this down trend line, and if it could possibly be a sign that we go up and test that bull flag, the resistance of the bull flag, which currently for next week will be around 448. Okay, but we do got some more levels that I'm watching. I'm watching this level here. I actually put this in already, but around the 427 level, this connects around June 21st of last year's high, and it connects to October 4th of this year's low. We had a couple more, another touch here around February 28th low. This is a weekly, guys, remember. All right, so that's around 427. All right, so above 424 puts 427 in play. Then the 50% retracement level here I got is around 430.4. All right, the 61.8 retracement level I got above that is 442. All right, and then of course 448 will be the breakout of the bull flag. Of course, if we do start getting more bullish price action, I'm gonna be working to refine my resistant levels, and maybe I can find some more levels that's worth watching. Okay, but as of right now, those are the upside targets. All right, those are the resistant levels. If we can clear that 416 level and we play it level to level, 418.5, then possibly up to 424 to 425-ish, then of course 427 like I mentioned. Okay, there is some around 422-ish. All right, that's based on a previous low back here on 422. Let me add that level for you guys. So this is how I look for my support resistance level. I look for patterns like bull flags, pennants and stuff, downtrend lines, and I look for previous support and resistance levels, previous supply and demand zones. I use Fibonacci levels. That's what I do. So okay, so we got this purple line right here. The levels are on 422. All right, it's been tested. It was served as a resistance here back in May of last year, support back in July of last year. All right, and January of this year actually. So we'll see. It's also an area of confluence. It goes right here, connects right here. So if we don't get a breakout of this trend line by next week, then the week after, this is an area of confluence for around 422, 423 zone with this down trend line. All right. So those are my upside targets. I'm going to say it one more time. So SPY is around 410.5 right now. So I got support around, well, resistant. The next critical one, at least based on the weekly chart, is 415 to 416. 418.5. All right, above that it's around 422, 423-ish. Give it a zone. And then 424, 427, 430.4. All right, and I do see some resistance around 436s right here as well. Okay, so resistance here, supports there multiple times. Okay. So I will count that. That's around 435.9-ish. And then above that, we can see if it'll test that 61.8 retracement at 442.2. Then 448 resistant of the bull flag. All right, guys. So there I show you guys how I find my resistant levels, okay? As far as support levels go, a critical one that I'm watching, well, was watching, I'll add the level here. That's purple. I'll change that color to blue. Okay, that royal blue one, it served as a support level here back in April of last year, twice for 2 weeks. All right, served that support here. Definitely back in February of earlier this year, definitely a strong bounce on that same level. All right, also around April 25th low. Okay, so that's around 410.5-ish. Okay, so yeah, definitely watching that. And if that level loses, which is where it's closing around right now, all right, I do have some more levels. Now you can't see them on the weekly chart. I will have to find them on the daily chart. Okay, these are just the levels based on the weekly chart right now. Okay, but you can see here on my fib levels, the white line, I do have a level around 404. Now, watching this previous low right here, that's around 404 as well. Interesting. Okay, so we got an area of confluence. In the past, this level has served as a strong support level, and it's also a Fibonacci level. Okay, the 23.6 retracement level. That's a very critical level. If bulls want more upside, that 404 level must hold at all costs, because it's a 23.6 retracement level, and for a bottom to be in, the 23.6 retracement level must be the first level to be recaptured, and it must hold. Just like in the past, in past bear markets with the 2008 bear market, 2020 bear market. Okay, the 23.6 retracement level was the first level that was captured, and it held no matter what. And that's what how it was able to put in a bottom. But if we clear that, if we lose that level again, 404, that's clearly a sign that we're possibly not in. We don't have a bottom yet, and there's possibly more downside. So watching that 404 level, very critical level, and then below that is my multi-year trend line around 398. That's for next week. Okay, if we lose 398, that puts a test of the support of the bull flag back in play at 385. Okay, now 385, here's another area of confluence. 385 is the support of the bull flag, but it was also the low of the May 9th week. Okay, so definitely got to watch 385. If 385 fails, I think we can drop even lower, all right, than 380. All right, let me see if based on the March 2020 to January fib levels, I have 380.3 as a 38.2 retracement level. Last time we got to that zone, we had a strong bounce. You can see it right there. Strong bounce. No coincidence where the SPY found a lift off or a bottom for this little rally right here. Little bear rally. Okay? But if 385 loses, I'm favoring a new low, meaning I highly doubt, and I do favor that this 38.2 retracement level will fail. Okay, guys? So definitely watching that. Now, as far as in between 410 and 404, I've been using the 407 level and 408.5 level all week. Okay, now you can see here that now this is based on the daily chart. You can see here that 407 did serve as both a resistance and a support level. Okay, I'll change that color to a lighter purple, I guess. Okay, so that level right there, 407 level, it was May 26th high, and it served as last week, and June 1st is low, and June 2nd's low. Okay, that 407 level is definitely a level we must watch. Between the 410.5 level and the 404 level, definitely watch that 407 level. And I was also using the 408.5 level as a point of reference as well as a support level. Okay, because this was May 17th high. Okay, so that's what I was watching. You can see here on the daily chart. If I take out all these lines. Okay, now you guys know what all my levels are that I'm watching and how I find them. But, you know, we look on a daily chart. It does look like it's a, you know, this would be the flagpole and, you know, just basing here, consolidating, possibly. Okay, something like that. All right, so that's the range right now, around 416 all the way down to 407. SPY is chopping in that range and tricking us out, using those levels, giving us false breakouts. Okay, for me, if we can break out of this flag range right here, I think SPY will reveal us its next leg. Okay, whether it's going to continue this rally to the upside, needs to clear that 416 level, as I mentioned on the weekly chart as well. But for bears, we need to really clear that 407 level and go test the other critical levels down to 404 that I mentioned and then 398. Okay, other than that, as long as within this range, that's a chop range to me. That's a nice wide range. Keep in mind, SPY's been spoiling us traders with these nice big moves lately. So it's not, can't be too surprised that this chop range is pretty wide like that. From 407 up to 406. That's a $9 range. But hey, that's what happened. Did get a false breakout on June 2nd though, but could not clear it. All right, guys. So that's what I'm watching. I hope that the plan makes sense. Okay, I identify the support and resistance levels. Resistance clears, I look for calls. Support clears, I look for puts, and I play to the next level to level, and I take profits, and I just leave a small runner. Okay, I always swing for the basis, and I allow my small runner to catch my home runs for me if the market decides to give it to me. If not, I'll take a small loss on it, most likely, which does not offset my profits because it's just a small runner. All right, so that's enough about SPY. Here is the VIX. VIX is looking bearish, guys. Got the breakdown of the triangle pattern back on June 1st. Yesterday gave us confirmation. Well, Thursday gave us confirmation, but yesterday on Friday it back tested that resistance as a resistance, this triangle pattern, back test as a resistance, and just continue to push down. Okay, so I mean, June 3rd's candle did close higher than June 2nd's candle, but you're just looking at it overall, it doesn't look bullish. So for me to be bullish on the VIX, need to recapture 26.2, recapture this triangle pattern, and just go test the next resistance level at 27.5, 29.7. And of course, try to break out of this triangle pattern. But as of right now, it broke down and it's just looking bearish. Okay, with the next support being 24. Okay, then below that is 22.4. All right. So remember, I like to use the VIX to help gauge the SPY. So if VIX is looking bearish, it's possibly the SPY may head back up higher. Okay, and probably fill out this flag pattern on this chop more. Okay, so moving on to QQQ, very similar to the SPY, how I was just chopping this past week. Okay, I was definitely looking at that 306.5 level. That's that blue level, based on a previous high from May 17th, and we broke that level down. I do have some support around 304 to 305 zone. That served as a strong support zone pretty well this week. Okay, so SPY definitely, QQQ needs to hold those levels, or else we could see more downside down to 301.6. And if that fails, I'll definitely look for puts down to 295.8ish. Okay, nice big drop coming with, and then 293.5, and then possibly all the way down to 286. Okay, so definitely watch that 301.6 level. We lose that, that's a sign that a bottom is not in. Okay, that's my 23.6 retracement level for QQQ. Okay, for me to be bullish, it needs to recapture 306.5, put 309 to 310 zone back in play, and if that can clear, we can go up to 312.5, then possibly test finally the 315 level. Dow Jones, similar, QQQ and SPY, just choppy week. Okay, it did capture a critical level at 330.4 on June 2nd yesterday, broke back down. Technically, that is a false breakout, okay? But we got to watch that 327.2 level based on May 17th high. Again, if Dow Jones loses that level, that puts 325.5 back in play. Very critical level, and did serve as a nice support level this week. But if that is lost, the bears are back in control, down to 321.2, 318.3, and a very nice drop down to 313ish. Okay, so got to play level to level, let that price action guide you. When we lose the support, that's when we want to get bearish. For me to be bullish though, it needs to recapture that 330.4 level, possibly clear that 333 level, served as a tough resistance this week, to put 338 in play. All right, guys, and here is IWM, critical support at 185.5. All right, as long as above, all right, there's a chance we go back and test 189, then 190.5, and if that can clear, a nice big pump to 194, then 195.6 is in play. Best time to turn bearish when we lose that 185.5 support level, which put 181.5, then 179, then possibly back down to 174.3ish back in play. Okay, looking at Apple here, I talked about that 148.4 level all week. Possibly Apple is rolling over now with this drop below it. Okay, that's a false breakout based on June 2nd. We cleared it. We actually never lost it, actually, since May 27th. Very choppy, but we never lost it until yesterday. Okay, so for me to be bullish, Apple needs to recapture that 148.4 level. I'll look for calls if that happen and play the false breakdown. Okay, false breakdowns are very bullish, and market makers love to trick us out. But if we don't recapture that level, I will continue to stay bearish. I will respect this false breakout. Okay, we have some support here at 145, and if that fails, 143, 141.5, then 139 back in play. Oh, Tesla, very similar to Apple. Look like it's possibly rolling over, but you see this white line right here, this white line, you can see that that's the level around 701, and you can see in the past around here it served that strong resistance, here it served that strong support, here as well. Okay, here as well, back in February, late February. Okay, now we zoom in a little bit, you can see Tesla closed around that level. All right, and I don't see that much of a wick, a very tiny wick. Okay, and that tells me there's not showing much buying pressure at that level. So bulls, that's not a good sign. However, anything can still happen. For me to be bearish, more bearish on it, I want to see that 701 level get breaking down, and that could possibly put more downside in place, starting with 682.5, then possibly down to 650, so a 649 zone. All right, for me to be bullish, there is some resistance at 719, 729ish, 730s to 729ish. Got to clear that level, and then the big level at 745.5. Got close to back tested it as a resistance yesterday, just a couple dollars short. Was able to capture and clear it on June 2nd, but that's a false breakout or a false recapture, which is not bullish. So we need to clear 745.5 for me to be more bullish on it. Okay, starting with 718, that's the first resistance level, 718, 719 zone. Okay, but if that 701 level goes, very bearish. Okay, that's my 23.6 retracement level, very bearish, and a sign that a bottom it's not in. Okay, guys? So, that's what I have for you guys today. Thank you guys so much for watching. Hope you guys have a great and relaxing weekend. And talk to y'all soon.